All right, folks, stocks are not the only thing under a bear attack. The bears are dipping their claws into the oil patch at this hour. We can look at oil at the moment on your screen. It was already down well before President Trump confirmed tariffs on the country's biggest energy importer, which is Canada. Those tariffs will begin at midnight. Crude, right now in the aftermarket session, is lower by $1.60. That's Brent. Brent is at $71.21, down 2.25%. As for West Texas Intermediate, we've got WTI at $68.12 a barrel, down 2.33%. OPEC, in essence, started this. It proceeded with saying it will proceed with a hike in oil production next month. Supply up, price down. Now, on the flip side, look at this. Natural gas is bucking the downward trend. Nat gas futures at the moment are popping 8%. The price of natural gas has seen a pretty torrid run-up of about 59% since November's election. A big part of Trump's path to energy dominance is the plan to greenlight new liquid natural gas projects. Keep in mind, America is already the world's largest LNG exporter by a long shot, shipping 88 million tons in 2024 alone. On the day President Trump was sworn in, he declared an energy emergency, a national energy emergency. And 6 out of the 46 day one executive orders and actions were tied to energy. So what is the energy emergency? How will the plans that Trump has, in fact, in the pipeline, how will they affect the industry? Jill Evanko is the CEO of Chart Industries, which manufactures the very equipment needed to service the energy and industrial gas markets. Jill, first of all, how is it that natural gas is, in such a pronounced way, doing the complete opposite of oil on a day like this?
Well, first, thanks for having me today, Liz. Certainly what we're seeing around the world, not only in the United States, but is a renaissance for liquefied natural gas. Certainly energy intensity, the need for more energy power sources coming into play makes natural gas a very viable solution. And that's not just a United States comment, certainly U.S. being a key provider of that with the natural resources that we do have. But we're also seeing a move globally, given that there's import infrastructure as well as export infrastructure in place already. So this is a very viable answer to the immediate need for growing energy intensity, whether that's through increasing data center build, artificial intelligence, or simply just alternatives to oil, the oil field.
Yeah, let's keep in mind the need for natural gas to power utilities and electricity in the grid, especially for all this demand that everybody seems to expect for artificial intelligence, is very much at the forefront of this discussion. That said, when I look at some names in the natural gas field, an area like Cheniere, I mean, ticker symbol LNG, Cheniere is selling off by 4%. Some of these companies are your customers, I would imagine. And when we look at the ETFs, 3 of them, at least for natural gas, are indeed moving higher because they are very specific to nat gas. Tell me exactly what it is you feel you do best for the LNG and overall nat gas industry.
Absolutely. I mean, we provide process technologies, engineering, design, so the process itself for gas to liquefaction of the molecule, in particular for LNG with our IPSMR process technology. That serves customers, as you named Cheniere, one of our great customers and end users, amongst many others globally. One of the things that's a key differentiator for Chart is that not only do we provide our customers with that process technology, which in many cases operates above nameplate capacity, but these customers can also get their key pieces of mission critical equipment that supports the process from us in one of our multiple manufacturing facilities around the world. We are the only United States manufacturer of brazed aluminum heat exchangers, which is the heart and soul of liquefaction, in particular for modular mid-scale processes for LNG export. So we're very excited to be able to serve our customers from the beginning of the value chain with the process all the way through to service, aftermarket, repair, which is a very long-standing relationship from the process provider, the equipment provider, to companies that are going to operate these facilities for decades to come.
You know, I look at your stock, and over the past year, you have done very well, up about 30%. I believe that that is pretty much up there, or maybe even outpaces the S&P. That said, it's been a kind of a rough year to start. Year to date, you're down about 14%. What do you think gets investors more excited about this company?
We have very strong orders growth as well as commercial pipeline behind us. So that's something that sets up our ability to continue to profitably grow through the coming near term in 2025 as we lay our outlook out just this past week, all the way through to the medium term. In addition to that, we are in a position now where we've been generating operational cash flow to drive our net leverage ratio down, and we're below 3 on our net leverage target. So that gives us more flexibility with optimizing our balance sheet. And we still have room to grow on our margin expansion. And so that's something that we see as all kind of things combined with macro tailwinds specific to Chart tailwinds, deleveraging, and our ability to execute on our Chart Business Excellence initiatives to drive further profitable growth ahead here in 2025 and beyond.
Well, you're doing something right, Jill. You've doubled the S&P's performance over the past year. Thanks for joining us.